All right, good morning. How was everyone doing today? Let's get going here. All right, so we got I started with the bond market here this morning. Since it's breaking down below some relatively significant support, I'm just trying to hold here, but definitely held here and had the big rally and tried to hold here, and smaller rally. And the retest obviously has now failed with this breakdown here, which means interest rates are going up, which is in this market environment anyway is supposed to be a good thing. Interest rates moving higher, which means good for the economy, which means there's a demand for money, so interest rates rise. So good for the stock market. Well, stock market kind of yawned. And some of the markets, we've got topping tails now in opposition of the bottoming tail bars, which leads to some of what we talked about yesterday of, trading range, some indecision. And so the next question does become, is this just a rest before continuing higher? Or is it a market top? Well, honestly, I don't know, but it's one of the questions that we ask ourselves within an uptrend. And when we have not here so much in the bond market, we'll get the equities. But when you have multiple time frames and uptrends, monthly, weekly, daily, and now the hourly is somewhat in question. I don't think we've gotten quite breakdowns yet. But with all of those time frames and uptrends, we just make the assumption that it's a rest before going higher, especially when it's at new all-time highs. Now, that being said, as intraday traders, things can happen that, although we have a bias that the markets can go higher, it doesn't mean markets can't go down, have a bear market for a day or two. And, things can go down, relatively large amounts in a couple of days. Not so, relative, to just as an intraday trader. So now that we've got these bonds breaking down and equities not, you can see this red here. Everything is red. YM is now just tickling on the side of the green side here. Typically what you see is, these are red and these are up. So there's becoming a bit of a disconnect here where the equity markets are losing part of their let's say floor support for what's going on, which opens up the door to a little bit more downside, and we'll see how much. And whenever anything that we're looking at breaks support, as it has here, we just simply look to the left and say, well, where's the next level of support? Is it, right next door, so to speak? Here, and just say, well, here, this broke, and then there's another one here, versus is it a relatively, large distance away, which I would say it is relatively looking to this daily chart because of the momentum move to the upside that created the void. So, here's the technical analysis 101 concept of what was resistance becomes support. A little subjective since it's on the other side of what's directly to the left. Nonetheless, it's something that we do follow. What was resistance became support, and it rallied, and where it broke down from became resistance, and it went down, and this prior low to the left support, and now it's broke, which may form a 1, 2, 3 continuation to the downside. So this would be the next downside target, unless there's some miraculous recovery here, right? Bar by bar analysis. Can you imagine if this bar here, or on Monday, it retraced back up to the top of this bar and negated the red bar? So I'm not telling you to suggest that's what's going to happen. What I'm telling you and suggesting to you is there are methods that we use that allow us to adjust to what is happening in the moment and putting the moment in the context of what preceded it. So at this moment in time, this is broken through support. It's resting for this moment, and odds are it's going to go lower. Right? So that's what we're going with. Now, if this is going to continue to go lower and interest rates are going to go up. They just have to, right? So if we look at TBT, right, you can see it's popping higher here. And the next area of resistance is up here. And it's just a inverse, right, inverted, right, chart, so to speak, of what we look at. Interest rates going higher. This is supposed to be short bonds, but short bonds means it's interest rates. And that goes up to the next level here. So with that being the case, well, you have, right, and looking right here at interest rates, this number here is something you should be keeping an eye on. This was like the big number when, oh my God, the 10-year went under, I didn't want to do that. The 10-year went under 2%. Well, what are they going to do when it gets back over 2%? Because it certainly looks like it's going that way, right? So something to be aware of. There's something that money managers, that are looking at this relationship between stocks and bonds. And, this was a big worry. And now this is a recovery. And of course, the whole yield curve recession worries have dissipated at this point. And, we looked at this a week or so ago, the big improvement in the yield curve. So that's no longer a concern in this recession thing and blah, blah, blah. All right, so back to equities here. And conversation going on in the green room is, well, it's Friday. And that means Iron Condor day or credit spread day with 0 days to expiration trade. And the two topping and bottoming tails in opposition. So you can see prices are about in the middle. So I haven't looked at any of the quotes myself yet, but if you can get a spread below the bottoming tail and above the bottoming tail, I think that should be the play, because even on the intraday charts, that is the same story, the two reference points. And right now, again, if it is in the middle there, that's a good setup for an Iron Condor, if it can jiggle around between these two levels, 3,100 and 3060. Perfect. You're even down a little bit below this swing right there. So perfect. Looks good. Now looking at the weekly chart, remember we talked about the narrow range day, and now it's a narrow body day. We got the rest of the day to complete, of course, but it's a slowing momentum candle. You can forget about whatever you call it, the names, doji, shooting star, blah, blah, whoever. Just the range is narrowed from what it was, and it's a small candle body. So momentum is stalled at new all-time highs. Makes sense. Maybe it pulls back a little bit. And so we say, well, pull back to where? Let's, right. So we just put a line in the sand there and say, well, could it pull back, right, to what was resistance to become support? Well, sure it could. Would that be a deep retracement based on that? Let's just put it on the daily chart and we can, that would be within the norm, right? It'd have to, if it got below that bottoming tail bar, that would be the next level, give or take this area, right? So that's the factory work. Makes total sense. No fib lines, no Gann lines, no pitchforks, and all the other crazy thingamajigs that they use. All right, let's move along here. Spiders, same story. We looked at the S&Ps, we looked at the futures, right? Clouds, Ichikukmi clouds that became on the scene a couple of years ago. That was the holy grail. Yeah, it was a very nice chart artist creation with all the colors and squiggly lines. Very much to drag in the unsuspecting, naive new traders into the realm of, this education world of trading and taking your money for indicators. Anyway, that's one of my pet peeves. I had to go off on it once in a while. Same story here in the Qs, topping tail, bottoming tail. There's your range, back and forth there. We'll see. The markets just stay in between here. Well, I've been talking about kind of like boring days, and there's pretty much, the markets have gone absolutely nowhere here, right? Just, after the gap up Monday, nowhere, down a little bit, recovery, push up, back down. It's pretty much in the area of where it started the week, give or take. So it's been a resting week. That's slowing momentum by definition. It's resting. It's not that there's really anything wrong here, seriously, other than, I take it seriously, the wrong way option traders. And again, they were betting on the call side with a vengeance yesterday that this market was going to explode. Look again, down at 0.6. These guys cannot win for long. It's not possible. It would be like the end of the world. There would be some major shift, in that crack in California. And who knows, maybe California would go into the ocean and that whole disaster there would go away. I'm getting off on a tangent here, but I mean, these guys are so wrong so often. You just be foolish not to pay attention to what they're doing. And if they're betting that the market is going to explode to the upside, it's just not going to happen today. Maybe it's going to happen next week after the premiums are sucked out of those things. And that's exactly what this week did, right? It's sucking the premiums out of those call options. That started on Monday with that gap up. So that is a bearish sign, but look at the breadth again. It's declining. This market, whatever's going on here, this market is not firing on all cylinders. Even though we got the indices here, this weak breadth, and now it's under zero from yesterday after the market popped up. You better be careful out there. All right, let's move along. We looked at the S&Ps. Well, maybe we didn't. Anyway, trading range, maybe a breakout failure. I'm not sure yet, but top of the range, well, top of yesterday's high, and here's the bottom there, chopping sideways. Qs, same story, bottoming tail, topping tail, going sideways there. YM was the leader yesterday. Nice wide range bar. And I spoke about that a week or so ago, about it playing catch up, and it's exactly what it did. So now the media's got the Dow, new all-time highs. Everything's fantastic. Nothing to worry about until there will be. All right. So anyway, stall day, wider trading range. If the markets do begin to fall apart, maybe this is the go-to for a short. We'll see later on. Russell, top of the trading range, getting rejected on each time it goes up, but not that bad. I mean, when we look at candles, right, we see these big bars and that jumps out at us. Yeah, that's great. We see all these tails. Now I look at the closes and I'm like, this thing's done nothing for 4 or 5 days. It's just getting rejected from here, but it's not going down. Well, not yet. Maybe it will. Maybe today's the day. If it does, wide range bar is a momentum move in a smaller time frame. Factory work breaks down here, should be a good short for a day trade. Keep an eye on that one. Oil consolidating, looks okay. Just chopping around, waiting for whatever. Bonds, we already looked at. Looks lower. Next range here, intraday beginning to form a W bottom. So maybe a little counter trend trade setting up there. Gold, bit of a disappointment here. Wide range bar on the weekly chart. I was looking for this thing to curl up, and it certainly don't look like it's going to curl up now. If the markets do move lower today to what some extent, what's been happening here is buyers go to gold. And I'll tell you, if and I don't know if this will happen, it certainly doesn't look like it's going to happen. It never does when you see the red bar, but bottoming tail bars were red bars before they were bottoming tail bars, right? So if this was to turn into a bottoming tail bar today, if you own this already, be time to double down. If you don't, buy it. I think this thing could rally back. We'll see what it does next week. And if it doesn't, well, maybe it's coming down here to 1400, which wasn't any part of my bias, but we'll see what happens. Right now, it's downtrend. It's broken support. Looks like it's going to go lower, and that suggests it's going to go lower. So it's not looking good for the moment. And silver, same thing, and that's even uglier. So that's the story with the markets. We'll see what today brings us. And, the dollar's been all over the place, right? It went down, it came up. The euro is doing what it's doing. So, those things connect and they disconnect over time. It's not, like they're glued together, but in any thing. All yours, Dan.
All right. Yeah, I'm here. Sorry, I was just answering a email for a subscriber on moving a stop. All righty. Still a lot of earnings. So let's take a look at gappers first. All of our positions look fine. AXP, we're long, actually gapping up, showing relative strength. We moved the stop to break even yesterday. Workday, it's gapping down. We have a call spread, and I already moved stop, so let's just let that expire. 100% worthless today, which is always the goal. I told we're going to roll NVIDIA. We're short the 205 calls, which is fine. We're going to roll them out to the 215s because it has earnings next week. And I immediately got an email from somebody saying, are we holding this into earnings? And I said, well, it's a core trade, so I'm tracking it that way. And we've been selling covered calls every single week to lower our cost basis. Our cost basis is in like 182, way the heck down here. But I said, it's a personal decision. You have to trade your own plan. And if your plan says, thou shalt not hold over earnings, period, well, then get out. You got a monster open game. And so that's kind of a silly question. I mean, you know what I'm saying. Hey, McGraw, I still got this Baidu in my watch list. That you nailed that yesterday. Nice job. Look at relative strength closing at the high. Now it's gapping up. The weekly has room to 140 to 150. I'm mad we didn't get on board yesterday. HEIO 32 bucks. Bearish gap, but sloppy. We'll come back to it. I know y'all were talking about condors on the SPX, but I like legging into them. So with the pre-market bearishness, yeah, I'm favoring more of the call side. 37.50, gapping way down here to support. I need more data. TDC getting whacked here. 20. Wow. When you have to blow up your monthly chart. Wow, it's gapping to these prior lows over here. That's pain. Nothing to do with it now. Square gapping down here a little bit. We were watching this yesterday to see if this, had a nice, it had earnings and broke out of this trading range, had a beautiful explosive day. So we were watching for a double bottom right here, but then when the market turned weak, I said, hold off. But I'll still watch it for a few days. Same with Google. We were watching this for a put spread. And when it started selling off with the market, I sent out an alert saying, hold off. Derm, 875, big old gap, but that's kind of my target. So nothing to do with it now. Stone, relative strength. There's not much volume, so I can't tell. TTD, 189. It's actually that's a bear flag on the weekly. It's on support, which is why it's bobbling around. But that's a bear flag right there. Let's keep an eye on that for a call spread. Wow, is this a bio? This looks like the disaster of the day. Now look at that. Look at the monthly chart right here. It was 140 bucks. Wow, that's pain. Here's some more pain too. Med, 68 bucks. And that used to be 250. Wow, that's incredible. Well, there's nothing to do with it. Zeus, I don't like the spotty intraday. TOT gapping down, but it's an ADR. I don't like it. Yeah, the call side first, Lewis. You know, I don't do things right away. Let's wait 5 minutes, and if it can't bounce, I'll be watching it closely here. But that's also my bias. What do we got here? Sample. I can't tell where it's gapping. No volume. GTX. That's a mess. ePay. Can't tell where it's gapping. AER. Spotty mess. Zulu, big gap. 37 and change. Has a price void. That could be worth watching. That's I would like it better, you know, if it were gapping just to like 36. You know, when gaps get too big, it's like it's eating into my target. But 30-minute high, maybe target 42. But remember, two-step process. It's a bullish gap with a price void. That's number one. Number two, put it in a 5-minute window. This is everything we talked about on Wednesday of market preparation and trading the first hour. So I put it in a window here. Let's see what it does in the first 30 minutes. Yelp 33, it's a bullish gap up, but it's a mess. Gap into a wall of resistance. T2, once it's a mess. Well, actually, it was earnings, but actually, since it's flat, that would have been a fantastic one for option selling into earnings, you know, that game. Whereas Disney, look at this, 140. Let me see what the expected move. Disney, the expected move was $5. Wow, that's kind of more than I thought. And it's gapping more. So the folks who sold call spreads or condors are going to get hurt. Whereas T2 expected move, 842, and it's opening flat. So that is an absolute home run for the Condor and credit spread sellers into earnings. TD, you can't tell where you're opening. Wow, that was a beautiful wide range igniting bar. Wow, that was a nice day. How did we miss that? Look at this. That's railroad track. Railroad track, 20 and 50. I gotta write that down and put that in my. That is a picture of beautiness. Is that a word, Alex? Beautiness. 96.21. That's a bullish gap. Let's keep on. Let's see what it does. Oh, lost my spot. All right, stamp. Do you remember this thing was 40 something bucks down here? Now it's greater than 100% retracement. Look at that. Not of that one, but of this one. That was pain, and it just clawed its way back and still has a price for it. Wow. SRPT. This sounds like a bio to me, but no pattern. Overstock, no pattern. Your dog, Munster. This trade's crazy, but it's a gap up. So McGraw, this is a definite put spread candidate. I'll put it here. And I'm gonna pull up monster quotes right now. And we would do them for 0 DTE plus we could do next week. But let's keep an eye on it. Edit, no pattern. Dish, no pattern. I'm deleting you. Disney we looked at. DBX. I don't know. Booking. Wow. Gapping up to the top of that bar. Woo. Let's keep an eye on that thing. Wow. That is a crazy gap. This is a beauty call spread candidate. Beauty. Let's 5-minute low. Let's hoping that there's juice. I mean, that's like a no-brainer. Gapping under, leaving a wall of resistance. The 57 for next week is only 26 cents. Here goes, look at Munster moving. Yep, see, that was, these were my favorite gappers, but all right, Munster 56. For today, it's bid 0 by 30. For next week, 0 by 40. So they are not interested in doing business with us. Bearish gap there on Arna, ICE. All right, I'm done with the gappers. We're ICE. We were just watching yesterday. Nike, I like over Wednesday's high. All right, I'm not going to worry about. We'll look at these later. I'm into yesterday's stuff. I just got a house clean. Oh, Square down. See, so now I'm not interested in Square. Look at Zulu holding very well. But I don't do anything in the first 5 minutes here. Let's keep an eye on Expedia. That he'll get his sea legs back eventually.